Hi everyone, Don Singletary, and welcome to the channel, the only channel that is dedicated exclusively to helping home investors learn how to day trade the Micro Eminis. Today I'm going to tell you why I rarely, if ever, trade the 9:30 opening at the market, that's Eastern Time, and how managing losing trades can actually increase your profits more than you think, and the stop market order to keep those unrealized profits from drifting back into the market. That and more with live trading coming up right now. You've probably heard me say before that I rarely trade exactly at the 9:30 Eastern Time opening of the market during the week, and I wanted to give you some idea why. Right here, the first 9 minutes, 9:30 to 9:39, we're varying like $68 almost without warning. There's a lot of trading and positions going on, and usually extreme volatility in those first few minutes of the morning. What I like to see is for the morning to wear on a little bit, perhaps 15 minutes some days, half an hour up till 10 o'clock on others. Otherwise, you could find yourself like a feather in the wind or a 12-foot John boat in the Bering Sea and 25-foot waves. It's pretty harsh. Now, if you're feeling lucky, you have a 50-50 chance, so that's on you and good luck. Oh, and be sure to notice inside of that rectangle in the bottom pane on this drawing, how the red and green lines look like spaghetti and very few clear trading signals. I want to show you another morning, the 19th of June 2020, Friday morning from 9:30 until about 10:05 in the morning. See the red square in the MACD pane? The red and green lines are meandering in and out of each other. No real patterns coming up there. But watch what happens here from 9:30 to 10:05. Now, I want you to remember that red rectangle down below and see what the green and red lines weaving in and out of each other is. I want you to remember that pattern. That's the sign of a market that's going nowhere. The market opened at 10,093 points and it changed $4 in 35 minutes later at 10,091. Can you imagine trying to trade during this hour? There are no clear signals. You wait, you got up, you prepared, you came in, you funded your account, you got your computer on, you're all dressed up, and there's no place to go because this is a lousy trading day. As I always recommend you do if you're going to trade the day session, always read a morning report, like I get the morning squawk. I read it on this morning, and let me tell you, there are 3 Fed chairmen speaking at 3 different news conferences between 10 a.m. and 2 p.m. The pandemic's going on, the political squawking back and forth, and the market's going nowhere fast this morning because it has no idea what those people are going to say at their news conferences, and so it's very non-committed. And you can see that by the MACD pattern of the red and green line during this first hour of first 35 minutes of the market opening on this Friday, June 19th, 2020. Now, if you watched a lot of the videos here on the channel, you know I don't beat around the bush very much. I try and get to the point. So why am I spending all this time today pointing to you a market you shouldn't trade and showing you what it looks like? I'll tell you the answer is very, very simple. You know I'm big on trade psychology, and you've seen that chapter in my book, I hope. And you have to take care of yourself. This is self-preservation, especially if you're a beginner and you have a small count. Trying to trade during a time like this, when there are no clear signals and high volatility, it will rock you around, it will take your money, and there's no indicator in the world that's going to keep you from this volatility and the not knowing of what 3 Fed chairmen might say in their news conferences today. So you got to pick your battles. If you're learning to swim, you don't dive into the rapids or the deep end of the pool. And trying to trade during a time like this, especially for a beginner, can be very perilous. Now, if it's danger of what? Danger of you getting frustrated, danger of you losing your money, danger of shaking your confidence on trading. And I know you're eager to get in there and make some money, but patience pays. this is the time to not do anything. You never go on a picnic unless you check the weather first, is all I'm trying to say. So you have to learn to do this. It's self-preservation. Don't get into a place or a type of trading during a day where you're going to continually frustrate yourself because you want to trade so badly. You are just looking for a place to jump in. Well, this is not a good place, and this is how patience pays. You know, I also say it's the trades you don't make that will make you a lot of money. That's because you can get into a lot of bad trades during the times like this. So be patient. Learn to wait until there's a good opportunity in the market and a clear trading signal. One of the things that's different about my instruction is I teach you how to lose trades well, is how to take profits out of them. I think that's very important. 40% of your trades are going to be losers, so you need to understand that. Here's a trade I began, I think, at 10:29 a.m. on June the 17th. I shorted one NASDAQ100 Micro Emini at 99.57 and a quarter, and now I'll take you through this trade and show you how this loss is handled. A lot of people think I spend all day on the screens, but it's not true. I didn't come in until about 10:25 on this morning. I found a sell signal almost immediately, so I shorted 99.57 and a quarter. This NASDAQ100 Micro Emini. I'm using my standard setup here, the candlestick charts with 5-minute increments and the MACD. So the market's been drifting down since the 9:30 opening over here. And I'm hoping it'll turn back down for me because I'm short that contract. And I did have a proper sell signal because my green line was below the red line, and both of those were below the zero line when I initiated this trade. So it's 10:32 now, 3 minutes into the trade, 99.55. I'm almost even money, maybe up 57, so that's $3, $5, $6, maybe $4 now, or even. And it just bounces around really fast here. You have to remember that this is going to be a losing trade. I've already told you. But what you have to do is learn to handle those 40% of your trades that you're not going to win. And the goal here, a successful losing trade, by my own definition, is one where you don't allow your losses to run away from you. Holding that trade, when it goes against you, can run up losses that'll overtake your profits. And you must be able to, as they say, nip it in the bud if it doesn't go your way. Now, I'm 4 minutes into the trade here and still about even money. That's not good. By the time I go 4 minutes in a trade, I like to see some progress in the trade, but I don't always get what I want. I have to go by what the market tells me. Now, bumped up to where I'm down over $20 on the trade, so I put in a market order and exited immediately on this trade because I don't want to take a chance on the losses running away. You can see I'm down $23.50, 11 3/4 points in about 5 minutes. And that's the damage is not too bad at $23. And here's a chart from 2 hours later that day, afternoon. Remember, I entered this trade around 10:30 and got out at 10:34. And you can see that that vertical yellow highlighted line there. That's my 5 minutes of trade there where I lost the money. And the market did indeed turn around. So I didn't want to take a chance on it running up, and it could have gone the other way. I might have gotten out of a trade that would have made me $100. You never know. So don't depend on trying to find certainty before you make decisions, because it doesn't work that way. The market will tell you what it's doing. You don't get to tell the market. Stand by, because coming up next we'll be analyzing that winning trade I promised you and using some stop loss orders. Right now, day trading mythbuster time here. I know you've heard some of this before, but a little repetition might drive it home between the ears where you need it, so indulge me for a moment. Number one myth, you can learn to trade without risk, and you can learn to swim without getting wet. I don't think so. You can practice your method until it gets to be perfect. Obviously not. If the perfect trading system were there, somebody would introduce us to it. And in all time, it hasn't happened yet. The more indicators I use, the better my signals. You think you put on safety when you keep adding indicators, trade signal indicators, technical indicators, but just the opposite is true. You get a simple indicator that's all those indicators are made from the same 8 pieces of data: open, high, low, close, bid ask. And there's not much difference between them, although they can look entirely different. They all work more or less the same. I'll get good enough to win 90% of my trades if I just practice and get the experience. This may be the biggest myth of all. Even the best day traders only win about 60% of their trades. And by the way, the same is true for sports gamblers in Las Vegas. They only have to win about 53% of their trades to make a lot of money, and they do it by using the law of large numbers. Our cumulative profits and losses over time, not our win-loss ratio on every single little trade, are what make us successful. Trading more often will make me more money. Usually the opposite is true. It's those trades you don't make that we were discussing in the first part of this video that will help increase your profits, because you won't be trying to fight battles you can't win. And your experience over time does make you a lot better at making those decisions. Just don't expect certainty before you can reach a decision, because it works the other way around. Click the like button and help me keep making the videos that you want to see. And check out the book link below to my Amazon listing for my new book, Day Trading Micro Futures for Income. Thank you. Okay, the following is a winning trade Wednesday, June 17th at 3:10 in the afternoon. See the red circle on the bottom there? That's my sell signal on my MACD, the green below the red, and both those lines below the zero line. And I short just under 10,000 here on the Micro Emini, the NASDAQ100 Micro Emini. And I'm just about even money here after a couple of minutes. Now, this entire trade was about 19 minutes long. I'm going to use some time compression here because I remember this trade well, and for about 10 minutes, nothing at all happened. So I'll help talk you through some of it when we have some changes on the screen here. One of the things about this trade, it's a little cautionary. Over, you see the yellow highlighted in the lower right of the screen there, the MACD negative trend or bearish trend here is only -2, -3.5. As trends go, that's kind of weak. I like to see something -10, 20, 30, or 40 is a stronger trend. So you have to be careful. When the trend is weak, it can turn around on you in a hurry sometimes. You can see here a few minutes into the trade, I'm about $12, $13 down. I shorted one contract at 9,996 and a quarter, and it's trading at about 10,003 right now. I'm going to dash ahead in time here in a moment, so watch for it. It's 3:17 now, 7 minutes into the trade, and we're almost even money, maybe up $4 or $5, something like that. The trade, I told you when we started here, for the first 9 or 10 minutes, it does almost nothing, so I didn't want you to get bored. Okay, now we're 9 minutes into the trade at 3:20 in the afternoon. We've got a little bit of money coming up here, $99.90. That's only $12 up so far, so let's give it a moment and see where the trade goes from here. And now I'm going to advance forward 4 minutes from 3:20 to 3:24. I'm up $48.50 now, 13 minutes into the trade. The MACD is still very much on my favor. Those lines are diverging more, and I'm up a little money in the trade now, so I'm going to put in a stop market order at 99.85. You see the market's trading 99.70 right now, so that stop market order is about 15 points or $30 above where the market's trading right now. So I locked in $22.50 with that stop market order at 69.85. Now we're up to 3:26, 15 minutes into the trade. I'm up $51 right now, and I'm going to go down and change my stock market order from 99.85 to 99.80. And we'll see what this does to the trade here. We're trading about 99.72, up roughly $48. 16 minutes into the trade, a 69.80 stop, which is about 8 points above where it's trading right now. That's fairly close, but the momentum downward seems to be okay, so we'll see how this goes. Seems to be moving in my favor right now. We're down to 99.64, about a $64 ahead, and it's a good time for me to move that stop down just a little bit more to 99.75. Okay, now we're up about $65 in the trade, trading 99.66. Our stop market order is 99.75, 10 points up from where the market is right now. Well, the MACD is still strongly down, but the price is not trading down very much, and I'm afraid we're going to lose some momentum. So I'm going to go in here and bring my stop down to 99.70 even, and that locks me in about $52.50 at 99.70 for the worst case scenario in the trade. Now it traded down to 99.59 there. And we'll see what happens as we go along here. That's the reason we use these stop market orders, because these intraday trends, sometimes I thought they're like shooting stars. They just don't last forever. That's why I want to get that stop market order in there so we can not give our unrealized profits back to the market. Very close to 99.70, and we were just stopped out right there. So we're out of a trade at 99.70. And that's good news. We get a profit of about $52 on the trade. I talk about trading journals a lot, and I'm not really big on just trading with software, paper money, because all you get is a ledger. You know when you got in, when you got out, how much you made, but you can keep so much more. I urge you, please, especially if you're beginners and you're doing your 25 consecutive successful practice trades, very important, print out the screen. You can print out the screen on this video right here and make notes there. You can do it on your own trading software. Just do that screen capture. In Windows, it's called a snippet, I think. And you put that in a word processor, print it out, and you can make your notes right on the chart. It's a great way to go back and learn again and review and study what you're doing so you can get better at it. You might find your mistakes or things, more importantly, things you could do a little bit better. Now, this is the type of information that should go into that trade journal. Trade duration, 19 minutes. You know where we sold, where we got out. The maximum drawdown was about $15. And if you recall during the trade at that time, I kept a close eye on the MACD and the lines. The red and green lines were still diverging. It was getting more and more bearish momentum in the trade. So very low stress trade, because MACD was on my side and $15 is not a big drawdown to have to tolerate. In fact, that's pretty good. Maximum unrealized profit, the most we could have made on this had we been perfect, and nobody is. You only get a part of that curve on the trade. 74.50 was the maximum that we could have gotten, and we got $52 out of that. And that, I think, is a very successful trade. Well, that was a nice ride today, so I'm glad you were along for that. Please remember to check out my book. The book sales support the channel here and all the free videos, and hit that like button because that's the way you say, if you click the like button, you're saying, yeah, I want to see more videos like this one. That helps me prepare and bring you the material you need so you can be able to learn faster. And subscribe to the channel so you won't miss being notified. You're notified automatically when you subscribe when there's a new video up and posted. I'm Don Singletary. I hope every day is payday for you. And thank you.